Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review for Tuesday, December 16th, 2025. I want to go bar by bar, but at a quicker pace today. Before we get into today, I want to talk a little bit about yesterday. Dominant feature of the chart going into the day is this big bear breakout, covering a lot of points and a lot of bars. You can call it a parabolic wedge. You can see 3 pushes down here. Volatility expansion, bear breakout, followed by a pause, range compression, another expansion, a pullback, and then a third breakout. So yes, it's 3 legs down, but it's a tight bear channel. And on the 15-minute chart, you wouldn't see the pullbacks. It's simply a big bear breakout. And what do I talk about in every video? I talk about breakouts and second legs. And in general, I expect all breakouts to get second legs of some sort. The stronger the breakout, the more likely that breakout is to get a second leg, and it's probably going to get a second leg that is fairly symmetrical in size. So with all of that said, the reason I'm bringing all of this up is because going into the day, to me, it looks like the bears have unfinished business from yesterday. Bear breakout, and then a trading range, so bear flag. The trading range went on for enough bars that breakout direction becomes closer to 50-50. It still favors the bears, the bear trend preceding the trading range, but it spent so many bars sideways yesterday that it would not have been a surprise if instead we got a bull breakout and a reversal back up. But in general, I'm expecting the price structure to look something like this: breakout, pullback, second leg. And here we just have a breakout and a pullback, so I'm expecting a second leg down. So there's a gap down going into the day. And is that the second leg for the bears? It might be, but again, at least in general, I'm expecting symmetrical second legs for strong breakouts like this, which means we might get down to the 1R, leg 1 equals leg 2. Leg 1, pullback, leg 2, measured move. So that's 68, 40, and a half. Let me see if I can draw that in. So we have our leg 2 measured move drawn in here. So magnet below, and bar 1, trading range bar. So expectation, sellers above, buyers below. We're testing yesterday's low, generally should act as support. But until there's a bull signal strong enough to buy, I'm going to wait. So we're going sideways on the open. Most of the time, you got a trading range open anyway, so that's about 80% of the time. Yesterday was a bear trend from the open, but most days have some kind of a trading range open. Getting a bear breakout on 3, but it's a couple of legs down with the gap down, the pullback, the second leg down. So there might be support here. We may bounce and hesitate before going lower. Outside up, bar 4, but fairly big downside breakout below the prior bar. Maybe about the same distance as the breakout above the prior bar. So it's a good looking bull bar, but big bar means big risk. In the context, not all that great. Trading range open. We're back to resistance, yesterday's low. We broke below it. We're testing that breakout point. Again, this breakout still may need a second leg down, or a bigger second leg down. Bull breakout attempt, bar 5. Possible expanding triangle. We rally. We sell off to a new low. We rally to a new high. Expectation, sellers above, because it's a trading range. In a trading range, traders are buying low and selling high. I said trading range bar on bar 1, probably buyers below, which there were. and sellers above, which it looks like there are. Micro double top, up, down, bars 1 and 2. Breakout above that double top on bar 5. This should function as a wedge. 3 pushes up. 1, 2, 3. So maybe it doesn't have the traditional wedge shape, but it's 3 attempts to go up and a failed breakout. We broke above resistance but closed far below it. So expectation, reversal down, probably get a couple of legs sideways to down, and still expecting lower prices because of the breakout on the open of yesterday. So bar 6, it's the breakout, pullback, and a second leg up. So 6, maybe more of a sell to close bar, even though it's a decent looking bull trend bar. It's actually an inside bar, which means it's a non-breakout bar. Many bars, almost every bar on the chart is a breakout bar, which means it breaks above, or it goes above or below the high or the low of the prior bar. But inside bars do not do that, and they're trading range bars. It's an indication of range compression. Higher low, lower high, maybe in this case the same high. But in any case, breakout, pullback, second leg, but bar 6 not really breaking out of the prior bar, testing yesterday's close, which is also resistance because we broke below it and we're testing it here with a couple of attempts up. You could call it leg 1, leg 2, leg 1, leg 2. So it's nested 2 legs to resistance on a trading range open. And again, I said possible expanding triangle. 7, outside down, so sellers above 6. Bear breakout strong enough for a second leg down. 7, probably a sell to close bar, scale in higher. And the bears getting their second leg. Now we've got a 4-bar micro channel. So we're entering that support area where the market turned up earlier, bars 3 and 4. But this approach is stronger than this approach, or the gap down in the second leg. So this is more control. And it's now a 4-bar bear micro channel. So the odds are the first reversal attempt will be minor, so traders can sell here, use a wide stop, and scale in higher. So it's not ideal to be selling low down here in a possible expanding triangle trading range open, but the odds are this bear breakout will get a second leg down. And then we reach that measured move target in a hurry. Bars 10 and 11, vacuum test of support. Now the question here is, will the bears take profits and will the bulls start buying with a lot of aggression here? Will the bulls come strong? Was this simply a sell vacuum test of support and then it leads to a major reversal? Or is it a minor reversal? Either way, we know the market is testing support. Leg 1 equals leg 2, measured move. I'm sure there's many other measured moves that I'm not showing. It's also 3 legs down, bars 1, 4, and 12. Gap down, second push, and third push. So you expect a correction here anyway. But even though a pullback is likely, a second leg down is still likely. So not ideal for selling down here. Maybe you sell bar 10 or 11, taking a chance. But when you get bar 12, you probably have to exit shorts. So I think 12, because of context, flips the always in too long. But with price action perspective, the price action evidence, it's still always in short. Okay to be short if you're willing to use a wide stop and scale in if the market goes against your position. But 12 in this context, decent reversal bar, especially if it gets follow through, probably getting higher prices. So follow through bar, not the strongest reversal and follow through, but enough that it's a weak low 1 in leg 3, so probably buyers below 13. That makes 13 a buy the close bar, and you scale in. So the bulls, reversal and follow through strong enough for a second leg, and they're getting it here. Reversal and follow through, pullback, second leg, 15, 16. Now, we have to ask ourselves, again, is this a major or minor reversal? To me, it looks like a minor reversal. It looks like a leg in a trading range. It doesn't look like it's strong enough to reverse or to completely reverse this bear breakout. So to me, it looks like a bear flag, maybe a low 1, low 2 short setting up, but still no decent bear signal bar. So bears, they might sell below 16, but not the best, not the best entry in the world, but it's reasonable. You're expecting a second leg down after this. This is probably a minor reversal. So some traders will trail a stop order sell below bar 16 to go short. They're triggered here on bar 17. 17 outside up, but bar 17 is an interesting bar. It's an outside up bar, so it's a bull reversal bar that went below and above the prior bar. But the bar broke out more below the prior bar than above the prior bar. And that means it has a more bearish tendency. The breakout, the downside was bigger than the breakout to the upside. So even though it's a good-looking bull reversal bar, kind of like bar 6 was a good-looking bull trend bar, it actually might be a better fade, sell the close bar. Why is that? Because it's 3 legs up. 1, pull back, 2, pull back, 3. It's an outside bar with a bearish tendency, bigger bear breakout below the prior bar. It's also about a 50% pullback of the sell-off. So we're at resistance, not to mention the moving average there as well. So there are reasons to expect a reversal back down here. Bear breakout, low 1, low 2, low 3, setting up, 50% pullback. The bulls have their market cycle, reversal and follow through, breakout, pullback, second leg, pullback, third leg. So the bulls are probably exhausted. The traders who are buying know they're buying for scalps because it's a minor reversal, not a major trend reversal. So the bulls are not holding for swings. So they'll be quick to exit when they're disappointed. So maybe bulls hold on, waiting for a bear bar closing below its midpoint to exit below. But as far as buying here, I would not. I think 17 is a better sell to close bar. 18, disappointing follow through. So it's technically a breakout and follow through, or reversal and follow through. 17, 18, but bad context. Leg 3, counter trend, 50% pullback. Better for selling. And then there's the bear bar. 19, that bulls can exit below, and bears, always in short, they can sell below 19. So back here, when I said it's always in short because of price action evidence, I'm talking about the bars. Big bear breakout, second leg down likely, and there has not been a bull reversal strong enough to make me believe that it's always in long and we're getting a major reversal. However, because it's 3 legs down, we reached a measured move target, we're getting a bull reversal bar. I think the market could correct here for 2 or 3 legs. So rather than selling here, even though it's always in short because this breakout needs a second leg, I think it's always in long in the short term for a minor reversal, which is what we got here. So the problem with staying long below 19 is the bears might be getting trend resumption with basically a wedge bear flag, a low 3, and a 50% pullback of this breakout. And you can see if a trader bought here, or here, or here, anywhere through here, they're trapped on this 4-bar bear micro channel. Strong enough breakout for a second leg. One of the problems with selling here is the rally is also strong enough for hesitation for its own second leg, meaning some traders who sold down here got trapped, like the low 1 short, traders who sold below bar 13, they got trapped into a losing position. That's going to create some temporary support here. The traders who sold, disappointed, they scale in, they exit at break even. So I suspect this area will be temporary support and lead to a bounce. This breakout getting its support or fuel here from trapped traders, leading to a second leg. But then I think this breakout resets the market cycle to the degree that traders who bought up here, bars 18, 19 in this area, they got trapped. And that creates resistance. So yes, we might bounce here, but I'm expecting sellers above and a bigger second leg down, similar in size to this breakout. So this might simply be a pullback of the pullback. I use that term often, pullback of the pullback, and I hope I'm explaining it clearly. This is the breakout. This is the pullback. This is not trend resumption for the bears. This is a pullback of the pullback, because the market has this repeating pattern of breakout, pullback, second leg. Breakout, pullback, second leg. Breakout, pullback, second leg. And then here, breakout, pullback, but the pullback strong enough for a second leg. So breakout, pullback, then second leg. And then breakout, complex pullback, second leg down. That's my expectation here. So because of the low one, I'm expecting support. So as far as selling here, not ideal. It's not the worst trade in the world, but you might have to sit through a drawdown because of the rally. So as we test the lows, we're getting an inside bar, doji bar, micro double bottom with 12, finding support. So it might be always in long, again, similar to bar 12. 25 is okay to buy, but you're buying against maybe a 7 or 8 bar bear micro channel in a bearish regime. So not ideal for buying, a low probability buy, but again, there might be a bounce because of this rally. And then maybe you find sellers back up here in this area. So going sideways at support, we're back at that leg 1 equals leg 2 measured move. But again, we have to ask ourselves, is this a major trend reversal underway, or is it a minor reversal? We have the bear trend, the trend line break, the retest. Maybe this is a high or low major trend reversal, but the trend line break is weak. 3 legs up with overlapping bars and selling pressure, and the market did not even cross above the moving average. And then trend resumption was relatively strong. Micro channel with open gaps trapped traders above. So still probably a minor reversal. But even if that's the case, it's a trading range. So buy low, sell high, scalp. So we're going to find support. Traders are going to buy down here, but the upside is limited. They're going to sell up here, most likely. Bull breakout 28, strong enough for a second leg, but trading range context, testing the middle, might have to pull back first and then get a second leg up. So there's your pullback, there's your second leg. Now we might have 3 legs. Maybe 30 is strong enough for one more leg up. There's still that magnet above. I'm using the high close of bar 18. It could be the low of 19. What I'm trying to demonstrate is that there's probably a layer of resistance somewhere in this area, and we're approaching it with 3 or 4 legs. So 30, an inside bar, 31 a breakout bar, but leg 3, probably better to look to sell here, but strong enough rally. This is actually a micro channel, 26 through 31. First reversal probably minor. Bulls will probably get at least a small second leg before there's a reversal or trend resumption down for the bears. So there's the reversal attempt, but micro channel, buyers below. There's the second leg, 33. So 33 setting up a high 1, but at the top of a trading range, more of a sell signal. So decent looking bull reversal bar, but to me, probably better to fade, which means sell, especially when it gets bad follow through. So if you wait for more information, maybe selling here is too aggressive. Weak follow through, you can sell the close 34. Or wait for the stop order 35. 35 probably the best stop order trade of the day, in my opinion. It has a lot going for it. You've got the bear breakout, and this is basically a low too short on a higher time frame. I'll actually show it on the 15-minute, the way I see it. Bear breakout, low 1, low 2, and it's actually a lower high, which is good for the bears. It's a little suspicious when the second entry gives you a discount, and in this case would be if the low 2 was at a higher price than the low 1. Also the structure of the pullbacks. 3 legs up, 1, 2, 3. Strong trend resumption. 3 or 4 legs up here, 1 or 1, 2, 3. And then strong trend resumption down here. So maybe this breakout is now getting a symmetrical second leg. That takes us down to 68.24. So a really decent stop order sell below bar 35. And I said I would have showed on the 15-minute, so that's about 12.25, 12.30. So it's right here. Bear breakout, reversal attempt, second reversal attempt. So breakout, low 1, low 2 in a bear trend. Low 2 at the moving average in a bear trend with a good signal bar 35. So a strong trend resumption 35, 36, 37 a good bull bar, but following a strong bear breakout. Traders probably can be aggressive here, so sell to close 37. Even though it's a decent breakout bar, only a fraction of the bar is actually breaking out above the prior bar. It's completely below the moving average. It's probably controlled by the bears, meaning the bears who sold higher are taking profits. This is a profit-taking bar, a minor reversal, and a 50% pullback of this sell-off. More reason to sell. So 37 probably sell to close. Outside down, second leg down expected. Now we've got 3 legs down, and we're testing the low of the day. So it makes sense to take profits down here. If you're not short down here and it continues, that's okay, because the market might be transitioning into a trading range. Of course, it also could be a bear channel and get all the way down here. There is that leg 1 equals leg 2, measured move target here. So there is some room to the downside. 42, bar 42 gets there, the leg 2 measured move. But still, now it's leg 4. Hard to be short down here, especially with 42 being range expansion, another breakout, but it's a late leg. And it's a nested late leg. You can count 3 legs down like this. 1, 2, 3, or maybe 1, 2, 3, 4, or maybe that's just the pullback and you call it 1, 2, 3. However you call it, it's probably a late leg. And then of course through here, 1, 2, 3, 4 pushes down. So 42 might be a profit maximizing bar, meaning if you're short, maybe you just take profits on the close of 42, even though it's a decent looking bar. It's a breakout bar, breaking far below all the bars to the left. The structure supports higher prices, late leg far below the EMA at a measured move target. So it might be more of a buy the close bar to take profits, but I would not buy the close to go long. Some traders might, but my personality is not, at least that's not the way I trade right now. So I buy the close 42 to take profits, but not to go long. Reversal bar 43, similar to 12 and 25 or 28. You can expect a correction here because of the 3 legs down. Bears are probably exhausted in a channel. Bears are going to take profits at new lows, which is where we are. And again, nested 3 legs down, reversal bar closing on its high. Reasonable to exit shorts above 43. Probably always long based on context. Minor reversal through here. Still minor reversal. Got a low 3, bear breakout, low 1, low 2, low 3, but in a leg. So the problem I have with selling here is that you're trading a leg 3 for leg 4. And more often, if you trade leg 3 or later, late legs usually have deeper pullbacks or have pullbacks that lead to ultimately being reversals. So rather than selling down here, maybe I'd sell a pullback, but if anything, I'd rather look to go long here. 49, first glance, I thought 49 might be a better sell to close bar, breaking out of this tight trading range in a bear trend regime. Got a breakout point here, the bar 40 low. The problem, and it's okay probably to sell there, but the problem is when it gets follow through, buying bar 50, now it's always in long, probably going higher, bull breakout and follow through. So if you did sell, you either have to get out or reverse to long, because the bulls will probably get a second leg up here. The problem with buying is you have the bear trend line here, and then you have resistance to the left, breakout point, bar 34 low, measured move target based on the height of the breakout and follow through, bars 49 and 50. So that's this general area. Try to clean up the chart a bit. So I suspect we'll find resistance somewhere around here, but this is enough momentum for higher prices. 49 bull breakout bar, 50 smaller breakout bar, 51 bigger, 52 smaller. So it's kind of a breakout, pause, breakout, pause. Maybe there's one more push in the bulls before a correction or reversal, because we're testing what's probably high in a trading range. At this point, the market's not in a bear trend. You don't get strong bull breakouts like this in a bear trend. You might get it in a broad bear channel, so it's either a broad bear channel or a trading range, and you trade those the same way. Buy low, sell high. And right now the market is high, testing resistance. So the bulls who bought lower, probably going to take profit somewhere in this area. So not ideal to buy here, but this is a strong enough breakout for a second leg. So buying a pullback, looking to capture a second leg up, is reasonable. And you can see 53 testing right between those targets, the measured move target and the bar 34 breakout point, magnet showing resistance. So reversal bar, reasonable to exit, longs below 52 or 53, the bear outside bar. Even though this is strong enough for a second leg, and this is probably a minor reversal, because it's a trading range, the pullback can be deep. And gaps tend to close in trading ranges. So we have a breakout gap here, the breakout point, bar 48 high, that's the magnet. There's also the 50% pullback of the rally. That might get tested. High one buy above 54, probably sellers above. 53 is strong enough for a second leg down, and the context supports lower prices. There's a bear trend line. 55, bear breakout, but it's a second push, reversal, one push, pause, second push, approaching that breakout point. And also the 50% pullback has been reached. It depends on how you draw it too. Maybe you use the low to the high. So in this general area, we're probably going to find support. 55 is strong enough for a second leg down, but do you really want to sell this close to support in a trading range, especially when the bull breakout is likely to get a second leg and it has not gotten it yet? Why is this likely to get a second leg? Because of trapped traders. The traders, all the traders who were short or who did not buy down here, the bears, the sellers got trapped into a losing position on the rally. The bulls who did not buy missed the winning position. Both groups of traders are trapped. The bears are trapped in, the bulls are trapped out. Both are waiting for a pullback that they can buy. The bears hoping they can exit with a smaller loss at a lower price. The bulls hoping they can enter at a discount at a lower price, both hoping to buy lower, betting that the market will get a second leg up, or that higher prices are to follow. Remember, the price is always probing up and down, looking for the fair price. And when we get a rally like this, it tells traders that the fair price might be higher. So if you're short or if you're not long, you might want to start to think about looking to buy, because the market is searching for the fair price. And this is not to be ignored. This is a fairly strong breakout, which means higher prices might follow. Also back here, I was talking about the bear trend, the trend line break, the retest. This was all minor. This could be a major reversal, although this is still minor. So what I mean by that is we have the bear channel, but now we have a decent rally with 4 consecutive bull bars, 3 of them especially strong, crossing the EMA, getting completely above the moving average. There's a lot of qualities going for it. Every bar closes above the high of the prior bar. There's open micro gaps. There's a lot of strong qualities. And that might be a strong enough minor reversal to spark a major trend reversal. So you're still expecting a test of the lows down here, a pullback. But the question is then, do the bulls get the high or low major trend reversal? And we'll see what the trend resumption looks like. Bear reversal, pause, bear breakout, pause. Bears probably have one more push in them, 55 strong enough for one more push, but breakout point, 48 high, probably will act as support. Trying to break below 57, hardly broke below it, small follow through bar, third push, near support, not ideal for selling. And then a bull breakout and follow through 59.60. That's strong enough for a second leg, and it might be the beginning of this breakout's second leg. So we have 3 pushes down to support. This breakout needs a second leg, so it's probably always in long here. I'm not sure if we flipped back to always in short here, like maybe temporarily here. You expect a pullback, lower prices, but 55, not a bar that bulls are going to panic out because of, especially when it doesn't get follow through. So I think here it's always in long, 3 pushes down to support after a strong bull breakout. And then this is the price action evidence, another breakout and follow through, crossing the moving average, bull bar closing on its high. It's strong enough for a second leg. Traders can buy the close 60 and scale in. There is a problem here for the bulls. So like I said, this might be a bear trend. It's a bear channel. Trend line break. This being the trend line. Obviously not really breaking the more gradual trend line. Bear trend, trend line break, retest, high or low major trend reversal. But the bulls still have to get through this resistance. And there's layers. There's the high close, but there's also the breakout point, 54 low. Reaction to it there. Reaction to it there. Is this strong enough to sell, though? That's the question. Is this breakout strong enough for a second leg? It certainly might be, but where's the selling pressure? Where's the stop order sell? It really doesn't exist. 64, not a good stop order sell. 66, not a good stop order sell. The market keeps climbing higher. 69, a reasonable stop order sell, but the channel up is tight. So the best reversal you can hope for is probably minor. We are at resistance. We do have a decent reversal bar, but my concern with selling here is the approach. Too much buying pressure. Strong enough breakout, leg 1, leg 2. The bulls will probably get a third leg. Too late in the day to be trading here, but that's exactly what we got. Leg 1, leg 2, and a third leg. Now what happened here? We look back earlier in the day, and there's an area of resistance. You could say it's, I like to use best fit lines, and by that I mean whatever line seems to have the most bars react to it. So if I were to draw a horizontal line here, the market bounced on it there and there, came close there, reversed, broke below, became resistance, resistance, so probably resistance over here. And the structure supports it. I mean, you've got at least 3 legs up on a trading range day, and you're testing resistance. But like I said, too late in the day really to take any more trades. So that's going to be it for today's end of day review. If you made it all the way to the end of the video, if you're really serious about learning how to trade price action, and you want to go deeper with the material, Of course, I post these end of day reviews publicly, but I also have a channel membership where I talk about the trades that I actually take and I talk about other price action theory concepts. So if you're interested, you can check that out, of course. But I'm going to wrap up the video here. So thanks everybody for watching, and I hope everyone has a great night.